This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
Welcome to the Texas Land Guys podcast. We have Ryan Duffie, guest, back with us here in the Dallas office. Ryan, how you doing this morning?
Good, man. How are you doing?
I'm good.
Yeah.
Tim, good to see you too. It's funny. I was nervous coming in this morning because you sent me a picture of yourself yesterday with a complete buzz cut, and it looked really real. And you said, this is a new look for the podcast tomorrow morning. And
we actually should put that up on the YouTube channel so people can see, because it was pretty incredible how real it was. I actually sent it to my wife and my kids, and my youngest daughter was like sobbing when I got home. She thought I had a buzz cut. But it's crazy with ChatGPT just how how
I thought it was real for sure. And I was, I like to joke with Ryan whenever anyone says anything about like a haircut or hair loss or something. Ryan's like, "Look up here, guys. There's not much up here." And so I was like, "Wow, Tim's doing this just because we've got Ryan on the podcast, just to try to, kind of bond with Ryan."
Yeah, that's real support right there. Yeah,
that's right. Yeah,
but yeah, I was. I thought for sure that was real. So that was pretty funny. But I figured it was tied back to just how hot it is outside, and maybe football, because I know Luke's playing football right now. And I know that's like the coach haircut. It's like all the college coaches that are out in the sun, they're just buzzing their hair. But school's back. So it's, I know for all three of us, that means life gets a little bit busier. I know for some people, they say like, I love my kids back in school because it's a lot easier. But I think sometimes when school's back, there's more that we do.
I think it's harder because the routine is good. Like for us, you're back in a routine where there's a lot of consistency every day, but I think there's also just a lot less margin for things that come up that are stressful, because there's so many activities, basically from morning to night. You're waking up and you're getting started, and then you're going all the way to nighttime. There's, for us, we have tutors. Luke's playing football. I'm helping coach football at the school for 8th grade. And, there's all kinds of other sports activities with my girls, and then, activities just outside of that, with the school, with friends, parties, just all these things. And the days just get really, really full, which there's a lot of great things about that, but there's, more stress with that than the summertime, where it's a little slower pace and just some more margin just to be a family and not have to go rush to anything, all the time.
I know for me, and I feel like I'm a full-time Uber driver right now. My son has got like 4 birthday parties in the last week, so we're trying to go for a record here. But yeah, it's been a lot of that. We've got curriculum night at the school. Next week, we've got, flag football, baseball practice, tumbling for my daughter. Just we had a great summer and a really good time to rest and have fun as a family. But it is definitely ramped up, and it'll be a fun but very, very busy fall for sure for us.
Yeah, and we homeschool our kids, so that just means that they're still at the house, but trying to instill that structure back into the day is a little bit hard when the school year starts. And so it's getting creative on that. When it's 100 degrees outside, you want to be able to just like send them outside, but then you're worried about heat stroke. So so it's a lot on my wife. She does an incredible job, but it's a lot. And so I'll get the calls like at the office, and a lot of times when I get the call, I'm like, I think I know what this is about, and I'm like, is everything okay? And then it's, but I need you to talk to, James or Steven, or normally it's one of the boys. I don't think I've ever had to talk to one of the girls, but it's like, I need you to talk to them because they just, did XYZ or won't listen or something. And so then I'm getting on and trying to figure out, I think you said it, Ryan, the last episode you were on, it was, there's no playbook for parenting. So you're like, what can I say that I can back up that's hopefully going to work? Because I don't have a lot of arrows to shoot here, and I'm trying to help Jackie out. So those, to your point, Tim, those can be stressful, because a lot of times you're getting those calls like right in the middle of like some intense meetings or something. And then you got to immediately transition to dad/principal mode.
It's hard too, because I think we're trying to develop relationships with our kids, and there is a place, I think, of meeting them where they are, and it's stressful for them. I have kids that have some learning disabilities, dyslexia, and some things like that, ADD. And so school's stressful. And there, as a parent, sometimes it's like, we just need to get this done. You just need to get this done. You just need to focus. You need to, finish, and you need to, do better on your tests. And we can be so goal oriented and, trying to slow down and meet them where they are emotionally and helping them calm down. Because a lot of times it's just being calm, so they can relax and you can actually communicate with them. And, working through the challenges that they have in school and developing a stronger relationship rather than that actually pulling you apart, as a father and son or father and daughter or even husband and wife, because it's creating stress and conflict that's not being managed well. So,
well, today I thought it'd be good to hit more of the single family market and what we're seeing up here in DFW. Ryan, you really lead all of our pursuits related to single family and keep a really good pulse on the overall single family market and activity in DFW. So contacting builders constantly, finding out what they're looking for, understanding pricing, understanding really just where development and growth is going. And then also just on the land developer side, I know you're working with a lot of the larger master plan land developers, you and a couple of the guys that we've recently brought on to work on your team and really trying to expand the footprint of that. Single family market's been pretty interesting the last couple of years. And, so maybe we kind of start there, just talking about where it's been, where it is now, and kind of where we see it going, looking out.
Yeah, it's been a chaotic year, to say the least. A lot of ups and downs for sure. But I think we've, at least here locally, I think have had a really great year as far as getting deals across the finish line. We've obviously seen some pullback really over the last, call it 90 days. I think for us, we are really leaning into probably having, 15, 20 plus phone calls with builders, just every week, really trying to hear firsthand, kind of what's the internal temperature with builders. And candidly, a lot of that, it could be changing on a weekly basis right now. So that's required us a lot to roll up our sleeves and really be in lockstep with the market, just in that constant communication with groups. Because it's evolving week to week as we talk right now. And so, I think if I had to summarize it, just big picture, it's kind of a mixed bag right now. I think there's a lot of talk out there with the market that's pulling back and a lot of hurt. I know RSI sat down, they had their quarterly review 2-3 weeks ago. And so I think we've done a really good job of really leaning into the groups that are kind of taking the aggressive and being on the offense of trying to go after sites right now. And so, I don't know, I'd be curious, Tim, from the Houston market, how that stacks up with what you guys are seeing.
Yeah, I think it's an interesting year, like you said. Things that were really hot early in the year. We'll have our best single family year ever from a closing standpoint. Closing a lot of deals with builders, and then also closing a lot of deals with single family developers in big, large acreage master plan communities. We have a couple more of those that we feel confident are going to close this year, and then some more builder deals will close. What we've seen is that builders really pull back in Houston. We've seen deals drop, or we've seen builders want to extend and try and get into next year. In some cases, being willing to give the seller, some significant non-applicable money, basically just raise the price a little bit, let the seller land bank the site, and then they'll close it next year. I think the feeling that we hear from the builders is that there's a lot of confidence that as we get into next year and rates come down, that's going to juice the market and things will come back. I think Houston has not been overbuilt like other markets. And so I think people think there's a need to continue to build here. The developers, though, really haven't slowed down. The developers are pretty aggressive, looking at sites across the market and still looking at big development deals that are going to be, a 10-plus year kind of build-out deals. And so I think we're going to see that continue. Those deals are just so drawn out. They can't time the market. If things are weak right now, it doesn't even really matter because they're looking at the longer-term, picture of where they see things going. So I think we're optimistic. I think it has been tough with the builders. So I think as a broker, there's a tendency to kind of, shift focus to industrial, or you have an easier thing to work on. But I think I'm proud of our guys to continue to, get in front of builders, show them sites, go find sites, just continue to work the deals because it's such an important part of our market to be ready when things do start to come back. And then we are seeing the builders look at unique deals, especially infill suburban sites where they're still getting pretty aggressive. And it almost surprises me a little bit, but pretty aggressive on some of those deals just because there's a lot of barriers to entry and it's hard to go find sites in some of those markets.
Yeah, I would echo a lot of what you said. I think we're seeing a lot of the same stuff. I think with the exception of being oversupplied. I mean, I think right now DFW is kind of at a record level of, right around 74,000 lots under development. And really that stems from really in second half of 22 when rates kind of went from a little over 3 to, 7.75 and kind of in that fall of 22. Obviously really, really rough 6 to 8 months there. But I think we obviously saw that pivot in early 23, and it's been on a tear since then. And so I think we're seeing a lot of the deals that got put into motion starting in Q1 of 23 that are kind of now either under construction or delivering. We're just seeing an influx of all of that right now. And so there's obviously headwinds with tariffs and international buyers and a lot of other factors that are playing into a little bit of a slowing, but I would echo your comments. I think we're still seeing a lot of the infill sites that are, probably move up type opportunities. We're seeing builders still be aggressive on that front. I think one of the takeaways, we're seeing a lot of the high end kind of luxury production type builders aren't feeling the squeeze that a lot of the, entry level or first time home buyer builders are seeing right now. I know we sat down with one national group a couple of weeks ago, and they're the same. Their year over year is flat. I mean, they haven't seen a drop in home sales, and so it's been interesting to kind of that's been part of the dynamic of understanding kind of where we need to spend our time and focus on.
From a supply standpoint, when you mentioned 74,000 lots and think about how big the Metroplex is, are those focused in any specific area? Or are they pretty spread out? And I guess another way to ask that is, are there still areas where you could argue that, yeah, there's supply, but like those are still areas that the builders are pretty comfortable going to versus maybe there's just areas that are kind of off the map because it's like the supply in those areas, might not even be as high as the better areas, but it's just historically it's at too high of a level to justify when to go back. Like it makes me think of like a South Dallas.
Yeah.
Is that an area that is probably not in as much demand, whereas there's a lot of activity and supply in Collin County. But I know I just saw that Green Brick just closed like a $75 million land deal in Salina. So there's still a lot of activity there.
Yeah. Yeah. I mean, I think my thing that I'd like to communicate is like, we're still doing deals. We're still seeing offers get made. We've got 2 single family closings this week. I think being able to work with the groups that are kind of see the big picture. And a lot of that stems more towards developers rather than builders that are kind of constrained by being publicly traded and things like that. But I think Kaufman County, is what's leading DFW as far as lot deliveries right now. Kind of that Princeton Farmersville would be second in that area. Obviously, there's been a lot of lots coming online in Salina, and I think there's been some headwinds with just the amount of lots kind of all coming online at a relatively short period of time. But as far as pursuits go, I mean, yes, we're not seeing a lot of groups that are saying, hey, I got to be in South Dallas right now or anything like that. I think it is definitely a flight to the north, to the quote unquote safe submarkets here. And so I think being able to, and I also think deal size wise, I think, trying to be a one or maybe even a 2-phase type deal, call it, 150 lots, something in that range, I think has been a sweet spot for a lot of folks.
It's interesting how similar some of that sounds to the multifamily space when there's oversupply or times get difficult. It's just flight back to quality, and then deal size really matters because these bigger projects, probably for different reasons than the single family side, but they just become hard to capitalize. And it's, putting that much money into one deal just doesn't make sense. And on the single family side, with those kind of lot deliveries, the reality is the good areas probably don't have maybe in some cases, I know we've seen some pretty crazy pursuits in Frisco where some like big tracts that have just never been developed became available. And those are, I don't know how many lots, 500,000 lot type situations where there's going to be buyers for that because that's just such quality. But to your point, some of these other areas just kind of going and doing the more of the singles are going to make sense for guys right now.
Yeah. I think we're seeing a lot of, where DFW is seeing a lot of the hurt is really on the outer skirts, kind of the secondary, tertiary markets where, Kaufman County included as part of that. I think there's just been an influx of lots in there and the slowing. I think that first time home buyer's been hit hard as far as their buying power. And so we're seeing quite a bit of lot trading or builders either quietly or not so quietly, marketing, lot opportunities, whether it's an outright purchase or a lot swap. So we've had a lot of discussions with builders and on that front of being able to engage and say, hey, I don't necessarily want this publicly out there, but if an offer were to come along for these lots, we would take a hard look at it. And so that's where a lot of our focus has been, call it the last 60 days, is working just existing lot supply with builders and some of those good relationships that we have. And then I would say on the inverse of that, we've been working a lot with larger developers that I think are bullish, to Tim's point, on kind of going into 2026 and just knowing the time required to go put a big piece of land into production. They can kind of see the big picture. So they're looking at, entitling a site that might take a year's worth just to get entitled. And so we've been doing kind of both ends of the spectrum there.
Yeah, that's been interesting because I know Tim referenced it. They're working on some really large tracks with some of the same groups that we're working with up here, a lot of the same. Is there anything that you think has caused that over the last 12 months or so where some of these groups are just specifically very aggressive now, or were they kind of out there before and it just wasn't as much of a focus? Because it seems like there's just been a lot of activity on the large acreage side.
Yeah, it was funny. I was talking with a developer yesterday, and we were just kind of talking about how the last couple of years, we've been in quite a run, in the last really post-COVID with single family in DFW, and I think builders and their stock prices have reflected that. I think a lot of builders have done really, really well with good sized margins. I think there's also been, at least from my perspective, probably some lessons learned on, other pullback periods. But I think from what I've heard, I know there's a lot of builders that have really good, solid balance sheets at the moment. And there's also a lot of, I think, smaller, probably private builders, as well as some new builders that are looking to enter in the DFW market and have kind of candidly been waiting for this to happen. I think, when the market is extremely competitive like it has been, it's been really hard. If you've got a kind of an incumbent buyer here that can go outbuy anybody or outpay anybody. But I think having some of these new builders that have been aiming for this opportunity to kind of be able to gain market share when a lot of others have maybe overbought and are pulling back.
Yeah, that makes a lot of sense. I mean, our market is so huge. There's so much population and job growth still. And even though we've had, this couple of years, like you said, of a lot of activity, so now some oversupply, we're going to get through that because of just the size of our market. And then again, the DFW Metroplex projected to be the largest in the entire country, here in the next several decades. So you think about that, we're seeing that from other product types too. Lots of activity from both coasts, California, Florida, these different developers, equity groups wanting to come and invest in Texas. And, and there's also local guys. Like there's a group that, comes into our office once a month that does probably more development than anyone here on the single family side in Dallas. And they're super aggressive right now. And we're sitting down with them and we're looking at everything from, smaller kind of like urban deals, townhome deals to, mud plays out in the suburbs. And so, I think you're right. It's from a high level, some of the news from like RSI has been pretty negative, but then we're kind of on the ground, just working the deals as brokers, finding where there's still deals that make sense and finding where there's those that are going to be contrarian to just the overall kind of message that these public guys, once they hear it, they just kind of have to fall in line, and there's not much they can do about it.
Yeah.
But more of the private, smaller groups or the newer groups to the market can have more of a contrarian view and see this as an opportunity.
Yeah.
I was going to ask you guys about kind of the urban infill market in Dallas. Has that been active, or where's pricing been for that? Because I know in the Houston market, going back to probably 2011 through probably 2020, it was really strong. I mean, we had groups paying over $100 a foot for infill townhome sites, and just a lot of players in that space. And really, since COVID, it's pretty much been decimated. I mean, I think the higher prices we see are typically like $40 to $50 a foot for infill townhome land. Sales are not very good. There's not a lot of activity. I mean, it feels like it's dropped off like 80% kind of from the heyday. And so I'm just curious if there's a similar dynamic in Dallas, if you guys see more urban infill deals, if that's more common. I mean, in Houston, they were not huge deals. A lot of times they were anything from under an acre to maybe a couple acres, but there were a lot of them. I mean, there were thousands of infill townhomes built, maybe tens of thousands, in a decade period of time. And we've just seen that really slow down.
Yeah, I think we've seen the pricing for an infill opportunity has just been pretty staggering. I mean, we're pretty consistently seeing these infill lot opportunities just for normal detached single family. Feels like 4,000 a front foot is kind of the floor at this point, and really going up from there. Where we're tracking a handful of opportunities, but those are the ones that are still getting real interest. These kind of A+ locations with good schools. I will say, I think, Tim, on the for sale townhome front, we've definitely seen a pretty significant pullback in that. I think with the growth that occurred starting in 23, we saw a lot of groups that were going out to kind of the outer ring of DFW, kind of in the suburbs, and whether it be a standalone project or even inside of a master plan community, I think some of those deals have been really impacted in a negative way, and sales have slowed pretty significantly. I think that with the rising cost of construction and ultimately just in land itself, it's been hard to try to go deliver a townhouse that's, caught under $500,000, and you really have to go make a compelling argument for that in that secondary market to say, why would someone want to go buy a $500,000 townhome versus, a full house down the street?
Yeah. That makes a lot of sense.
We still have a couple of active groups that, are out there looking for those type of deals. But I would say at least on the for sale side, on the townhome front, we've definitely seen a pretty significant pullback over the last 6 to 12 months.
Yeah. And I think because we have zoning here, Tim, it's just pretty different on the core urban. I know in Houston, some of the sites you're talking about, Heights, Montrose, those type of really core urban areas, it'd be like uptown Dallas or East Dallas. It's just going to be hard to get the zoning a lot of times. And so you just don't see the same prolific development on the townhome side that you did in Houston. We don't seem to be as much of a condo or a townhome market as Houston was. We have some condos, but we don't have, in specific areas, we have some, but not like Houston where you would see those get built in a lot of different locations across the market.
Yeah, I was also going to ask, it seems like, tell me if you guys disagree, but it seems like we're in kind of this maybe bottom of the market, right now for single family. But, if rates do come down significantly, which it looks like they're going to, Trump has made it very clear that he's going to do everything he can in the next, 9 months or so to get them down significantly. Probably a new Fed chair after Powell that will be very friendly to lowering rates, and maybe even some reductions in the next month or two. It seems like that's going to really help the single family market. And then kind of looking forward, past the next maybe 12 to 18 months and thinking about longer term growth, 3, 5, 10 years out. You guys see, single family development just getting all the way to Sherman and just kind of filling all the way in almost up to Oklahoma over the next, maybe it's going to take decades, but it just feels like it's just going to keep kind of pushing up and expanding to the north and maybe in all directions going north.
I definitely think so. I think when you look at, here in Dallas, you look at the expansion of 75 or Central Expressway and kind of what that's done from basically Melissa up through Anna Van Alstyne up into Sherman. I think they're doing the same thing with I-35 going up through Denton and Sanger and going northbound right now. And I think that those two kind of serving as the goalposts as far as the Metroplex goes. I think you're just going to continue to see big, I mean, we're already seeing it, but I think it's just going to continue. You're going to continue to see big tracks put into play. And that the area between those two, I think is just going to just get gobbled up. And so I really see that. I don't see that changing as far as the growth patterns for DFW. I think the median home price right now in DFW is around $405,000. So I think there is still a desire and a demand to try to go, deliver homes for that first time home buyer. So I think trying to solve for that and combat land pricing and construction costs, which I think construction costs, I'm hearing that probably that's going to, start to come down a little bit, I think, with some of this pullback, which would hopefully help. But we're seeing a lot of growth going out west into Fort Worth, Northwest Fort Worth, kind of going up 156 out by Texas Motor Speedway and really up through Justin and Ponder, obviously with Walsh Ranch out into the Lido part of it and West Fort Worth out there. But those continue to, I think, to be really the top markets when you look at kind of between those two goalposts of 35 and 75 and then out west right now.
As you're talking, it's amazing just to think about the geographic coverage that we have, just on our team here in Dallas.
Yeah.
And a lot of that is because, we share information and we have created the factor. And so we're able to, as a team, input all these sites, all this data, all this activity. And then now we've really developed the size of the team to the point where we can have several people focused on single family for the most part. And we all will help each other out and do different kinds of deals. You've closed industrial, multifamily, worked on some big data center deals. So we'll kind of work on everything, but
sure.
But we'll focus on a use type. But I think that's really unique because the Metroplex is so huge. I mean, it's incredible. I know you're working on some stuff in Caddo Mills, Greenville on one side, but then you've worked on some real big deals in Aledo on the other side. I don't know how long it takes to drive from Aledo to Caddo Mills, but that's really far. And then, we've also worked on some stuff in Sherman. I mean, where you're pitching wedge from, the border of Oklahoma. And so it's pretty wild how just enormous the Metroplex is. But I think what's exciting for us and our future as land brokers up here is they've done a good job of putting these big job centers like further outside town. So I love the Texas Motor Speedway area of Fort Worth because Hillwood has developed out all of that Alliance area. So you have the Alliance Airport, which is massive, tons of jobs there, but and all of the industrial that supports that. And then you have, Deloitte and Charles Schwab and all of the jobs there just to the east.
Yeah.
And for a lot of these homes that you're talking about, you can go and you can buy land still in Crum and some of these areas where you can go build a little bit more affordable homes, but you're not that far away from where a lot of people are working. People are not necessarily driving all the way down into downtown Fort Worth or on the Dallas side. I live in Frisco and I'm just a few minutes from Legacy West and the Star and all this new development, so many new companies relocating up into these areas.
Yeah.
That's great for us because you can go develop a community in Salina and be, a 25-minute drive or less to the office because you're not driving to uptown.
Yeah.
You could, but you probably aren't, And so I think that's just great for the growth of DFW that we have good infrastructure and we've put these job centers out in the suburbs that just allow for people to have more reasonable commutes.
Yeah. I think we've seen that too, where we've built up some new relationships with groups that have, dominated their respective markets out of Texas that are essentially saying, hey, we're tapped for land. Like we're that coupled with, I think, Texas being pro-growth and just more business friendly. And so they're expanding here. And I think the benefit of having the markets that we cover respectively, Houston, Dallas, and Austin, this triangle here, we all have plenty of land, to work with. I think that continues, I think, to, fuel me and my excitement for just a long pathway ahead. I think just there's so much potential and so much growth. And you touched on it earlier, just about what DFW is projected to be. And I think as long as we continue to recruit companies and increase, jobs, I think that's going to continue. Yeah, I think that for a lot of these developers coming in, it's trying to get acclimated to a new market, and discover land pricing and things like that. But I'm still super bullish on DFW as a whole, and just how job growth and the demand for homes is going to continue.
If you were talking to a land developer and they were asking, we want to go do 3 of these big communities, 500 to 1,000 acre communities, and they're, those are going to be 10 plus year projects, where would you point them as kind of like your favorite 3 areas across the Metroplex that you'd say, like, I really believe in, A, there's opportunities, B, the growth of these areas. It's just, these are going to be really good growth areas.
Yeah. It's probably not too dissimilar from the areas we talked about. I think really, up the 75 corridor is going to be really interesting. I think just we're continuing to see, obviously you've got Buc-ee's and Melissa, and you've got the new HEB, you've got a slew of new retail coming up and down there. So I really, just that connectivity of being able to really get up and down 75, I think, at least northbound, not here in Dallas. But I think that corridor continues to be just at the top of a lot of groups' lists. Obviously, so much has been made about this Salina, Frisco, McKinney corridor. I think that speaks for itself, is always going to be really high demand. I think where we're seeing some big deals get put into motion is sort of west of that a little bit, over into that Aubrey corridor, going up into Pilot Point. Really just bridging the gap, I think, just going from there over into Salina, where I think that is kind of the next corridor that we're going to see fill in. And then I would say, Denton as a whole has been pretty filled in. And there's just been some challenges with developing in that city. But I think, if you look out towards that 156 corridor, there's a lot of, big deals getting put into motion out there. Kind of in that 156 and 380 corridor. There's been a lot of growth. It's been hard to go try to find anything out in Aledo in that pocket, just with Walsh Ranch and how big of a project that is. But I really think that we're going to continue to see just when you look at Fort Worth as a whole, how big that city is and its ETJ, just how much opportunity there is.
Yeah, it's interesting. I mean, most of that opportunity is up north, and then you have that West Fort Worth area that their schools are so good.
Yeah.
But there's definitely a lot of growth out there.
I was going to say, Tim, what are you seeing as far as a similar type question of that, of areas that y'all are seeing kind of growth patterns?
Yeah, I'd say probably the biggest area for us for growth is north and northwest. We are seeing growth out west, but what's happened in the last 20 years is Katy and Fulshire and these areas, going really far west, been built out for the most part. And so now you're getting at the Brazos River and jumping across to Sealy and, really getting far west down I-10. And so we are starting to see that, also the Katy Prairie and West Houston. So kind of north of I-10, west of town it's amazing. It's probably like 10 or 15 miles past the Grand Parkway, is being filled in and built out. So that's already been happening, and it's continuing to just push further west and fill in. But now we're starting to see Waller and kind of the northwest going out to Hempstead and Prairie View, and in those areas we're seeing a lot of growth out that way up 290, and then going north, filling in between 290 and 249 on the pretty far north side of Montgomery. And then, we've had a lot of growth going north, past Conroe and, going up that way for about the last decade. So I think that's where the city's really growing. It's hard to grow on the southeast. We are closing some huge deals in the southeast, but those are really high barrier to entry markets where there's some sites that have been unlocked that are just great opportunities, like in the League City market, Texas City market, some of that area. The true southern part of the market down 288 South has been just a little bit slower. There's activity down there, and the Grand Parkway is going to come in and open up some more land down there, but it just is a slower market. And I'd say the same for Southwest, Richmond, Rosenberg. There's deals happening down there. There's activity, but we don't see it the same as we see, how hot the Northwestern quarter has been as a just an emerging market. I was going to ask too, though, just how you guys see tariffs. I think tariffs is probably one of the biggest stories this year for single family, and just the impact of tariffs. I think it was like April that Trump really had Liberation Day and kind of kicked things off with that, and then we had the pause, and now we have some renewed tariffs. And how you guys see that? Is it a big factor going forward the next, call it 6 to 12 months for single family? Is it something that they're adjusting to and it's not really a driver? Do you see it really affecting construction costs? I know there's all these different stories about, which countries and which products or, building materials are being impacted or not. And, recently, like with aluminum and steel and copper, having tariffs on those. I'd just be interested to hear what the developers and builders are talking about in Dallas in regard to that.
Yeah, I would say, it's definitely getting brought up. I think when you look at things like sheetrock and lumber and things that are getting, taxed on that, I think that it's obviously adding to the overall cost of the home, which is getting passed along, to the home buyer. But I think where we're really seeing it more so is just purchasing power. I think home buyers are feeling that in other areas of life, and that's impacting, their ability to go and put a down payment on a home. And so, like I said, I think construction costs are hopefully going to come down with a little bit of this pullback right now, which will hopefully help. But I don't know, Tom, I'd be curious, at least on your perspective too, on the tariffs thing.
Yeah, I mean, to your point, people have been talking about it, but I haven't seen. Yeah, I think where it's impacted probably our deals the most across DFW has more been just the capital, and so maybe it's more just the capital markets, and so that would probably be more like just what the public builders are having to say or adjust to with it. Just because I think it's uncertainty and some unknowns, and that's never good for deals getting done. But I haven't really had anyone be able to explain that it has a real true negative impact. And maybe it's because we don't 100% know yet on deals. So I've heard it more used to say like, we want to wait, see what happens and kind of let things settle before we maybe invest in a project. But then we've also had several deals that have just stayed on course, closed and moved on kind of throughout this whole time. I don't know that I can think of a deal where even from kind of Liberation Day on, a developer used tariffs as like a reason they needed an extension, to understand it better.
Mm-hmm. It seems like maybe the bigger issue that I don't know if this is being talked about as much, but I think the consumer is pretty fatigued. There's a lot of consumer debt right now. I think just years of inflation, the last 5 years, really since COVID, all prices going up for groceries and everything else. And then having higher rates, the mortgage is a lot more expensive than it was a couple of years ago. It just seems like the consumer is being conservative and pulling back. And we're seeing that on the multifamily side in Houston with rents. And there's some soft submarkets in Houston that should be good submarkets for multifamily rents. And we're just seeing, people don't want to sign up to be in the nicest new deal and pay a higher rate. And so it just feels like maybe that's the bigger story. And maybe those people are being impacted by the tariff story and the news and, some level of fear. And maybe I need to wait, kind of not make a big decision right now. But I agree with you guys. I don't see it as big of a deal as maybe the news media might make it out to be. Maybe it's psychological and it's definitely a capital markets impact. But to me, the true issue is maybe a weakness in the market with the consumer and them not being as aggressive as they were in the past.
I was wondering what you guys are seeing on single family land prices. I know that's a question that we get a lot from developers, builders, okay, the market is softer because of supply and some of these headwinds. So does that mean that now land prices are adjusting? But most sellers don't historically adjust land prices. If ever, it takes a while. So Ryan, maybe we'll start with you. Like, what are you seeing on the land? We saw some really high land prices last year. So what are you kind of seeing this year? Is it a lot of the same? Or are you seeing some discounts?
Unfortunately, yeah. My job would be a lot easier if they were course corrected with the market, but we have not really seen an impact in land pricing. I think it's for the landowner that may have held out and is still kind of clinging to that one LOI that they got at a high water mark and kind of thinks that's the market, and they're probably either not in a have to sell position either. So that has been certainly a big challenge of just pricing expectations with landowners and probably not being fully in tune with kind of what's going on with the home builders. That continues to be a challenge of figuring that out. But I do think some of the stuff that, that's been passed legislatively, both in Austin and in Washington, I think being able to sort of help combat some of that stuff and increase density. I think that's something that we as a firm have really dug into recently. I think been trying to figure out, for these sites that have historically been overpriced and not feasible for development, now could be put back into play with some of this new legislation that's been passed that can hopefully help increase density and help make a deal pencil.
Yeah, I was talking to a landowner the other day. It's a deal that's kind of up by the Texas Motor Speedway, and we closed a deal last year above 4,000 a front foot in the McKinney area, and it was a big number.
Yeah. And
there's this other deal that we've been working on, and we just revised our offer. I think we're at like 4,500 a front foot, and he wants 6,000 a front foot now. I guess they're in it for 5,000 a front foot, but I just the market's not the same today as it was even 6 months ago, and so it's a great site, great opportunity, but there's just not going to be a buyer at 6,000 a front foot in today's market.
Yeah. I mean, it's pretty wild to go back and look at just the price appreciation and what lots are going for, especially for these well-located sites. I think we've seen, I can remember even starting here at DMRE not that long ago, and construction costs, I think, were $800 a front foot, to go develop a lot. And just this past week, I had a group say, yeah, I'm pretty much penciling $1,500 a front foot,
wow.
just to go develop a standard 50-foot lot.
Wow.
And so I think that it's been a culmination of construction costs, of appreciation in land pricing, and then just the demand. I think the infill piece of it, like our quote unquote infill here in DFW, is getting redefined, really, just because the sites that are inside of our either inside George Bush or even south of 380 really getting redefined on what's infill at this point.
Well, you guys have done a great job here in the Dallas office of studying what we would refer to as like single family supply, and like what builders control what lots, what developers control what lots. And when the market was hot, everything was trading so quickly. Fast forward, I think what's really interesting is we were sitting down a couple of weeks ago and looking at just available lot opportunities that you guys are tracking.
Mm-hmm.
I mean, it's like dozens of finished lot opportunities available now in DFW. And I mean, opportunities in areas like Frisco with finished lots, where it was like any price that a landowner or builder, probably land developer, would have quoted last year, somebody would have stepped up. But now there's some real quality opportunities out there. And so to your point earlier about the groups that are a little more contrarian, have capital, this is an opportunity to come in and get some great positions where you may have to pay up for the right opportunities in good locations, but you wouldn't have even had a seat at the table a year ago.
Yeah.
And so I think that's really interesting and worth noting for anybody listening, any builders listening, that you guys have a lot of opportunities when you're sitting down talking to builders or land developers, and we're going through the Factor, which is our mapping software. I mean, we're not sitting on like 3 opportunities. I mean, we have tons of opportunities across the market to talk about.
Yeah, I think too, like we said earlier, I think builders are sometimes more constrained with what they can go move on right now. I think from specifically to developers, though, we've seen this, I think, having walked through COVID and also kind of that second half of 22 with rates spiking. I think where we really saw some pretty unique deals where we had some raw land with developers that, despite, the market really pulling back and builders pulling back, I think there was a lot of groups that held firm and kind of could see the big picture and sort of forged ahead and continued to close on their deals. And sure enough, the market rebounded and they were in a great position to go deliver lots when everyone was trying to scramble to reload on that. And so, I'm hopeful that it's just another, similar bump right now where I think we are working with a handful of those type of developer clients that can see the big picture and, recognize kind of this strike opportunity and going after pursuing land. And I think putting deals in motion now and then being able to deliver lots, here in the near future where I think they're going to be in a really good position, where I think a lot of these groups that have pulled back will come back and be, looking for new positions.
Tim, I'll circle back to you on land prices. Are you guys seeing something similar in Houston where land sellers are just not really adjusting, and that delta is for the most part just there kind of between market and what they want?
I think that for the most part, that's true. I think the way the land works is it's really the level of fear someone has about the future and how long things could be down, and then the need that they have to transact in the short term. I think those two things are really important. And for most sellers, at least in Houston, we don't see a lot of land sellers with a lot of debt. They're in a position where they can say, you know what, maybe builders are pulling back. Maybe the offers aren't what we'd like to see them, but we can wait. Especially some of these families like out in Waller, they've owned these sites for decades, maybe even generations, and they're thinking, I'm going to wait. I'm going to get the highest price I can. If it's 5 years from now, that's fine. So where we see any kind of a price break is these sellers who need to sell, and there aren't that many of them out there, but sellers who need to sell for one reason or another. They're ready to do a deal, and they don't want to wait a year or 2 years or however long they think it might be. And then they just have to work with whoever's at the table. And I think that the good thing for the buyers is there's a lot fewer people at the table today than there was just a couple of months ago, especially on these true builder deals. It's a more competitive market for the sellers than it was. But we're not really seeing discounts. If anything, maybe it's just better terms. Sellers are a little bit more flexible. They're a little bit nicer than maybe they were, 6 months ago. But I think it's challenging still to find good deals.
Well, I think that's good. I don't know if there's anything else you guys want to hit or talk about related to the topic before we wrap up.
One point I wanted just to bring out that Ryan brought up that I think is so important is that I think we're seeing a national conversation about a housing shortage nationally, and especially an affordable housing shortage, and the need for people to be able to own a home and have one that they can afford. And I think home ownership is getting out of reach for a lot of people in the middle class, which I think is kind of scary from an economic standpoint. And so I think to Ryan's point about Austin and then, DC and these conversations about, legislative changes and how do we help people get into homes, I think that's going to have a trickle-down effect that's going to affect all of our markets and hopefully open up more opportunities.
Yeah, that's a great point. Well, Ryan, thanks for joining the podcast today.
Yeah, absolutely. Honored to be here. Thank you, guys.
Reach out to Ryan, look at our website, dmre.com. Like I said a few minutes ago, we're tracking a lot of good opportunities across DFW. We're also representing landowners across DFW selling their properties. So if you're a landowner and you want to reach out on what your land might be worth, specifically, if it's large acreage, Ryan would be the guy you should talk to, or if it's a single family opportunity, he can give you a lot of good guidance and value to just consider as you're thinking about making that decision. So definitely reach out to Ryan. Thanks, guys.
Thanks, Tom.
Thanks guys.
Tim.
Thanks, Ryan.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.